Welcome to my channel CPA2B. Today we're going to continue talking how to pass the Trust Account Audit. We're going to expand on our last video and we'll go into more details how to create an invoice, a bill, and make a payment. We'll also talk about the job feature within Sage 50. This feature is the most important one because it brings all the transactions together. That way it's easier for the auditor to understand how the money goes in and out of the trust account. We're also going to take a look into income statement, general ledger, and the JobLedger report, making this the triple reconciliation. As always, if you have any questions, any requests, please do not hesitate to leave it down in the comments. Without any further ado, let's dive in today's video.
I want to continue my video talking about my personal experience with my first Trust Account Audit. I had to reconcile 4 years of work. Now, those 4 years did not include any major source documents. I had no invoices, no bills. I only had the bank statements, the copies of the checks that were written to third parties, such as public adjusters, and also to checks written to the claimant. When I was presented with this, I questioned what would the auditors would ask me, or I assumed that they were going to ask me for invoices, for example. And given the fact that I didn't have any paper trail of it, I come up with the idea to, in the software, in Sage 50 in this case, to record every single checks, for example, that I received, rather than to do journal entry or a manual entry of that check. I decided to create an invoice first and then receive that money. That way I could create a trail history of every money received by insurance company or mortgage company. I repeated the same with the bills. I created the bill for every single payment out of the trust account. At any point I could have a complete history of transactions per vendors, per customers as well. And to top it off, this feature of job that we're gonna see later on here in Sage, it ties everything together, making it pretty much crystal clear picture with a JobLedger report, income statement, balance sheet. Although are not part of the triple reconciliation, they definitely, you will see how each transaction affect each one individually. Now, general ledger, bank statements, and the JobLedger is the triple reconciliation. Each of these balances, I will show you, they have to match. This is the only way an auditor has a complete picture of what happened with the money that comes into the trust account and then later on leaves. We're going to proceed now with creating an invoice, receiving the money in that invoice. Then we're going to create a bill. Then we're going to pay that bill. After that, we'll see how the income statement, balance sheet, and JobLedger will look like. And then finally, we'll take a look at the general ledger, so we see what happened in each one of the accounts. Although I use Sage 50, which might be different from the software that you currently use, the parameters of creating an invoice is pretty much the same across software. The same thing happens with QBO or Xerox. However, the reason that I choose Sage over those software when it comes for lawyers is because it is a straightforward process, whereas with QuickBooks it's a little bit more convoluted. The invoice, we're going to choose an insurance company because this will be a check that we will see in the bank statement, and we're going to record how it's going to come into the bank account and which liability is going to affect. Now here, choose quantity, and then we're going to choose, let's just put for the example, roof leak claim. We're going to use $10,000 because it's the example that we used last time. Now for the journal, just the important part here with Sage, this is what I love, that allows me to choose which chart of account I can use, which account I can use when I make an invoice or a bill. A regular invoice would affect in the credit and income account, and in the debit it would affect an accounts receivable. But since we are depositing money into a trust account, the credit goes into a liability account. As you know, last time we saved this claim number as one of the liability accounts. Now I copy here because what I do, it is in the invoice, I use the claim number. it gives me more organization. Not only that, but also when it comes to choose the job, right now we created this generic one. However, the case number would also include the claim number. So automatically here, it will be easier for you to choose which job it is. As I mentioned before, the job is the one. Later on, you will see how it brings all the transactions together. The job will be used when we make also a bill, or if we ever have to do a general or journal entry, we also have the ability to put the job in there. So the job brings any transaction that we make into the software. That gives you the option to use the job. It will bring it together. So we're gonna save here. We're gonna use July because we are recording this in July 2025. Let's just save it. Now we're gonna go and receive the money. As you can see, it's gonna show up in here. I'm gonna choose it. Deposit ticket. What I try to do is I use the name of the insurance company. You can choose anything you want, but as you can see, this is similar to what a physical deposit in your bank account you would do. See, it makes sense to you to put something that you can identify later on. The reference number will be the number on the check. As you know, either mortgage company or insurance company, they will send you a check similar to the ones that the law firm sends to any third party with a number. That will be the number that we will use in here. I'm just going to put, for example, which one? For this example, we're going to use a makeup number. Clearly, it will be the day that it shows in the bank statement when the money arrived. What I actually do it is anything that has to do with invoices and bills, I create it at the beginning of the month by default, and then whenever I receive the money or I make the payment, I choose the exact date on the bank statement. Let's just say that in this case we received it on the 9th. Make it, and then if we look here in the journal, you will see similar to the example, similar to the exercise we did last video next on the Excel spreadsheet. The credit here now affects the accounts receivable, and the debit, it affects, in this particular case, the trust account. So we record the money comes in. We're going to save it, the money is in. Let's go now to two important areas, which is going to be the income statement here. As you can see, no money is recorded correctly because this money, it didn't come into the account as revenue for the firm. Given the fact that this money, it does not belong to the law firm operating account, it shouldn't show up in here in the income statement. And as you can see, it is not. Now we're going to go into the balance sheet, and definitely it's going to show. It's going to show that it affected the trust account, and it's also in the current liabilities. Now the key here is that your current liabilities has to match the balance that you have in the trust account. This is the most important thing, that always has to match. And final, we're going to go to the general ledger, and again you will see how it affected the trust account, but also the accounts receivable, how the money came in, it also canceled out, and then how it is in credit into the liability account. Now that we have the $10,000 in there, what we're going to do is we're going to create a bill. Now we're going to go to the bills. We're going to create a bill. I'm going to enter the bill first. And this is going to be the vendor ID, going to be the public adjuster, roof, leak estimate. The amount is going to be 3,000. Just making this up in here. And then we're going to choose the job. Now I want to come here to the journal section so you can see how it's going to play out, which the debit in this case is not going to be in a regular invoice, in a regular bill. The debit, it affects an expense accounts, and the credit, it affects the normal accounts payable account. Now here we're going to do a little bit different, where the debit is going to affect the liability account, which in this case is going to be the case matter, claimant, and you will see later on how the job describes and sees this together. And in the credit is going to be, I create personally, it's a separate trust account. I create separately an accounts payable to track every single bill that comes from the trust account. This is going to come very handy for the auditor, because at the end of the month, this account, once we see the general ledger, it has to be in zero, so it becomes an account to control on its own. If there is any balance in there, that means that while we're doing this reconstruction of the accounting side, there's something that is missing, that we are not creating the payment. So let me use this one here. Now we are going to, in the invoice number, we have different options. I also like to use the claim number, for example this one here. So it serves as a tracking, and it's a unique number as well. Save it. Now I'm going to pay the bill. We're going to choose the vendor. The payment is going to show up in here. Now, as you know, the date here is going to be the date that it shows up, that shows in the bank statement. We're going to just put this is going to be on day 11, just for the example. The check and reference number is going to be the check that you see also in the bank statement image from the law firm. Just put it's going to be 3401. And I want to come here to, you can see better. Once we choose the payment, we'll come to verify how the accounts are affected. You will see that the debit is going to debit directly the claimant's liability account, and the credit is going to come to the bank, to the trust account. Now this section here, one of the beautiful things that I like about Sage is that, given the fact that we are keeping track of a public adjuster, these public adjusters, in the last video I show you how when I save it as a vendor, I track every single payment, that it would become 1099 at the end of the year, regardless if I don't affect an account file for costs. This is also another advantage that I see over QuickBooks, where you would have to choose one of those accounts in order to keep track of the payment for the 1099 purposes at the end of the year. So here we're going to save this payment, and we're going to come back to the reports so we can see. Let's go to the income statement first. Nothing should show up there because we're not affecting anything that has to do with the operating side. Let's go to the balance sheet, and clearly we have now $7,000 in the trust account. $7,000 in the liability. And now we're going to go to the general ledger, and you will see each account how beautifully is affected, moves in and out, the final value. We had $10,000 initially, we paid $2,000, now we have $7,000. Now that we have this, I want to show you also the job report for the first time. I talked so much about it, and now you will see it. Boom, it's right here. It's the history where we received $10,000, we pay $3,000, and we have $7,000. When we're gonna make payments to a claimant, as I mentioned before, I take it literally as a vendor. Now, this vendor, when it's safe, clearly we're not gonna track the payments. And the reason we don't track the payments for 1099 is because IRS rules dictate that we don't have to generate 1099 for claimants. So in here, as you can see, I'm going to choose a claimant. We're going to choose we're going to put we're going to put the amount for this. For then we're going to make up, it's going to be $4,000. The job is the same. Now the journal, as you can see, we're going to do the same thing, where in the debit we have to debit, as soon as you should know by now, this is going to be the claim, and in the credit it's going to be the accounts payable, just to track the bills. I put this name here, but you could choose any name that you want to, that it might bring reference to you, that it could be easier for you to remember. Now we're going to save it again at the beginning of the month. The case bill, I put always the claim so it's easier to bring it then together. Now we're going to also make the payment for this. We're going to choose claimant. The payment is right in here. As you know, the reference number is going to be the name, the number of the check that is reflected on the bank statement. We're going to choose the date that is reflected on the bank statement, just say the 15th. And then if we go back just to see what happens, as you can see, it's going to debit the claimant's account, and also the money is going to come out of the trust account. Going to save it. Now, to see if this works right, we're going to first look at the income statement. Nothing is affected in the income or any of the expenses, so we're good to go there. Now we're going to go to the balance sheet. As you can see, now we have $3,000, so we're good to go here, even in the accounting balance. In the accounting equation, assets equal liability plus equity, so we're good to go as well. And then the final one is going to be the job ledger. Again, $10,000 were initially deposited, $3,000 were paid to the public adjuster, $4,000 were paid to the disbursement. Okay, and now we have remaining $3,000, which in theory, this is the cost or the fees that are going to be paid to the lawyer. But this, it will be covered in the next video. But as you can see here, this amount is the one that also should be reflected on the bank statement. So now we're going to have the bank statement 3,000, the job ledger at 3,000, and the general ledger. Okay, so the final step of this, for the triple reconciliation, before we take into consideration the payment to the lawyer, it's going to be, as we know, it is $3,000 that are going to be in the claimant's balance. The balance at the end of the month for the trust account is going to be $3,000. We are also going to see this in the balance sheet, $3,000, $3,000, and then in the job ledger, $3,000. So, and this will constitute the triple reconciliation. The final goal of creating this is going to be for the balance to be zero, because that means that every money that comes in, it ends up going out. Getting to zero is definitely what makes an auditor happy, and that's what we're looking for.
Thank you for sticking with me until the end of the video. As always, if you like the video, please do not hesitate to subscribe, share, and like it. If you have any specific requests or questions that you want me to, any topics that you want me to put more attention in future videos, please also leave it down in the comments. Until next time, have a great day.